All right, let's get started here today. Thanks everyone for checking it out. Thursday, November 24th, 9:15 a.m. Getting ready for the open here. We're looking at the CGC daily chart, and why CGC is so important is because it is the sector leader, and all the majority of the other licensed producers are going to be following along with whatever it does. And we saw this yesterday. We've been seeing this time and time again. You can literally look at the 5-minute chart and watch a volume spike come on CGC, and then you'll see it happen at the same 5-minute time frame on APH, ACB, and everything else. So look at the candlesticks, and they obviously all look very similar, with big bullish engulfing candlesticks heading into the trading day today. So the strong close yesterday at the high let us know to be looking for a gap up open today, and that's exactly what we're going to get. We're going to get a big gap up. So the general rule of thumb here for gaps, a gap is when you see an open or a close above where the price had traded. So you skip ranges. So the high of yesterday, 1046. So opening anywhere above 1046 is called a gap up open. 3 gap downs is a bearish reversal pattern, which is why we were looking to buy yesterday. Yesterday was the 3rd gap down open in a row. So we knew to be looking for an entry. The bulls showed up right out of the gate, and they closed up at the high. And when you close at the high, that indicates a gap up open is coming the next day when there's all this volatility. So that's what we're going to be seeing today. If you did not buy in yesterday, I would not be buying in today. What would be the reasoning behind that? The reasoning is the psychology, oh, I don't want to miss out. That's how you end up chasing. That's how you get stuck holding the bag. If you didn't make an entry yesterday, unless you are day trading, I would not be buying any of these positions on this gap up today. So let's look at the 5-minute chart on CGC and what I look at to establish support and resistance levels. So here is the 5-minute chart. Every single candlestick is 5 minutes of trading action. Look at the bull move right out of the gate. So we had the gap down open yesterday. The bull showed up in the first 10 minutes in a very big way. Look at this blue line. That's the 100 period moving average resistance. We rejected from it. We pulled back. We bounced off the 20 period moving average support. The long upper wick shows profit taking. The long lower wick shows bulls buying the dip. So the bulls bought the dip and defended this support. Why do I use moving averages for support? Look at this 20 period and what the price did all day. We saw higher lows and higher highs. We consolidated. We bounced off the 20 period support. Bounced off the 20 period support. Bounced, 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 and then close up at the high of the day. So we literally bounced off of this moving average support 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, over a dozen 5-minute candlesticks. And that let us know that the bulls were in control for the entire part of the entire trading day. So what I'm going to be looking for today to indicate potential profit taking is for a break of this higher low pattern, which was very clear, higher lows and higher highs. If we start to see lower highs and lower lows, then we will know that the bears are stepping in. If I were a trader, I am not an investor, so I would have bought yesterday and looked to sell today on the gap up. That's just the mindset I would be in today, would be to lock in those profits, trying to get as close to the high of the day as possible. We need to be watching the total volume. Total volume yesterday on CGC. Let's see here. So the total volume on the day was 17 million. It would require more than 17 million shares for me to be confident that the bulls are going to continue very strong. And what I do anticipate to happen, and what I've seen happen hundreds of times in stocks everywhere, is after a breakout and a breakdown, we reach what I call an equilibrium. And that's just a tighter and tighter range. So on this bull move to the upside, I do expect a lower high to be formed compared to November 18th. I don't think CGC is going to break 1404 on this move to the upside. I think a lower high compared to that level is going to be formed, and then we're going to consolidate back down, potentially filling the gap up today, which will fill at 1046. So I don't expect a huge breakout. I don't expect a bull trap. I expect a bounce and a lower high compared to 1404, and then a pullback to establish a higher low and watch the range tighten while volume decreases after all the volatility that we have seen. So the 5-minute chart, very, very key. And what is also important here is you can get a ton of support and resistance levels just by looking at this 5-minute chart from yesterday. Every single time we made a move to the upside and rejected, that's now a new resistance level. So the top of this big upper wick topped out at 1025. And then 1025 stayed resistance until the end of the day. Same thing with support. Every time we consolidate and pull back and form a higher low, that is a support level. So looking back at yesterday, I'm looking at the last support before the breakout towards the end of the day. 991 is support. Then down here, 973 is support. Down here, 916 is support. Down here, 826 is support. So I can look at this 5-minute chart and I can easily pick out a half dozen supports and a half dozen resistances. Now, they're not going to be really relevant today because we are going to see a gap up open above all of these levels. So we're going to have to watch the first half hour of trading, see what the price does, and look for new support and resistance levels to be established because there's not a lot in this current range where we are going to be trading at the open today. Another time frame I also use the hourly time frame a lot. And here is the 5-day hourly chart for CGC. And you can see the big bull day yesterday. We turned all moving averages on the hourly back into support. So that's a good start heading into today. And I'm looking back here. These are resistances as well. Every time we saw a lower high on this hourly chart over the past few days, that's a new resistance level. So I'm looking at 1148. That's a resistance because we saw a bounce attempt. We hit 1148 and then we continued to the downside. So 1148 is resistance. Looking back here, 1299 is resistance. Same reason. A bounce, hit that high of 1299 and then pulled back further. So 1299 will be the first resistance that I am looking at if we blow through 1148 this morning, and checking where our bids are at this morning, 1183. So the bigger that this gap up gets in the morning, the less likely I would be to buy. The more I just really do not suggest buying this gap up unless you are day trading and looking to lock in those profits today. It is not a good decision. You had all day yesterday to get in, so if you didn't get in yesterday, why would you get in today after a 10% gap up is coming? It's just you got to think about the psychology and the fundamentals here of that psychology, which is what technical analysis is built off of. And buying after a 10% gap up is chasing. We had all day yesterday to get in, and we knew to be looking for a gap up open today because of that strong close. And I posted on Reddit that chart that let us know that this big pullback was coming a couple days ago because the 15 minutes into the close showed big bear volume and a pullback. And it's a very, very consistent pattern at this point, where if we see a run up at the end of the day and a close at the high, we're going to gap up. And if we see profit taking and selling at the end of the day, we're likely to see a gap down. That pattern has played out almost a half dozen times over the past 2 weeks, and people were making bank today. We had people in the chat room yesterday who missed this initial move, and they were cautious about buying, but they waited until the end of the day and bought in, seeing the strength and anticipating the gap up. So that limits risk, and it limits your reward a little bit, but it eliminates a lot of risk as well by waiting to see if the end of the day is a strong close and then getting in for the gap up and then selling that gap up, making 10% overnight very easily. So we've got 8 minutes until the open here. I've got the tickers for CGC, APH, ACB, MT, and OGI. The rest of the tickers can't really be shown on these charts. So I'm going to be following these 5 mainly, and CGC is going to be the one I'm watching the most. And I will look in at these other individual names and find support and resistance levels once they get established in the first half hour of trading or so. But again, CGC is the backbone of this sector. And no matter what you are playing, you should be watching what CGC is doing, because that is going to trickle down into whatever individual name you are watching yourself. So the chat room, I see tons and tons and tons of messages. It's going to be really hard to follow along if we aren't staying on track. Pretty much, ideally, is we would not be posting in the chat room unless we have a question. Opinions and unrelated off-topic stuff is just going to make it a lot more messy to try and follow along and answer questions. I don't think we're going to see an immediate gap up and sell off, but yesterday we did see an immediate gap down and buying of the move to the upside. So we'll know very quickly if we're going to see a selling of the gap up open. If this were the US sector, I would be selling the gap up immediately, but I have a lot less trust in the US sector, and a lot of other people know the game by now. People have been trading those stocks for 6 years. This is all new. And there's a lot more emotion because of all the novice traders here that don't really know what they're doing and are going to be falling for this gap up. So we'll see how much buying we get right out of the gate. If I were in a larger position, I would probably take off maybe 10 or maybe half my position in the first half an hour of trading today and then let the other half ride to see if we can close strong again today. But as of right now, I am definitely looking for a top to form before 1404, and a volume is going to be very important. If we see significant volume today compared to yesterday, then this run can continue past today into tomorrow. If we see lesser volume, I would anticipate a lower high to form compared to $14 on CGC. I prefer the 5-minute chart. If I'm doing anything smaller, I'll use the 2-minute chart. 1-minute chart has too many fake outs for me. It's really, if you're trading with really large capital and entering and exiting trades within 10 minutes, then you can be using the 1-minute chart. But the shortest time frame I'll use is the 2-minute chart. And when we have the EMC IPO, which I'm going to be playing, then I will be using the 2-minute chart for the open on EMC. I really don't like the charting on Google Finance. It's really poor charting. It's like flying blind for me. So there is a chart there available, but it's really poor compared to all the other software out there. But it's better than nothing. So anything that I say on CGC, you can look over at and compare to any other ticker. So CGC, the high of November 18th is the level that I don't expect to break on this bull move. And so you look at APH.V and you look at the 18th, and that high is 699. So that's the resistance level to be watching for all these individual names. The high on the bounce attempt after that big crazy Wednesday. And for most of these names, that high occurred on November 18th. ACB, it's at 340. So that's the resistance level to be watching. American traders can trade the TSX, but Fidelity is one of the only brokers that allow it. And I know at least a half dozen people personally that have opened Fidelity accounts this past week just for the EMC IPO. And the Fidelity desk said to my friend yesterday, are you looking to trade that Canadian IPO next week? So they are seeing a big influx in business just for that reason alone. So a couple minutes here, we are seeing the big gap up open. And we'll see if the bulls can hold this gap up. Personally, I would have my stop loss. I mean, I'm a day trader, so I know a ton of you are longer term investors. So I would be looking, if the price dropped below 1150 this morning, first thing, I would be looking to lock in my profit, and then I'd be looking to make a re-entry once support were found. So I don't suggest trying to day trade without knowing technical analysis. This Canadian breakout has really put the cart before the horse for a lot of you people in terms of wanting to be familiar with technical analysis, but trading before doing so. I mean, the best way to be doing this is not trading or using any real money while learning technical analysis. I did that for 4 months and then was prepared to use real money. But now we're seeing trading with real money while trying to use technical analysis at the same time. It's really confusing and difficult. So look at the CGC bid just dropped 15 cents. So we have to be aware that there might be some profit taking right out of the gate from this big gap up. Mr. Shoot, you need to have a game plan for that size of a position. You need to break it up into multiple chunks. Perhaps have some for long term, some for short term. But the game plan needs to be established long before the trading day. If you're making decisions on the fly, you are being subject to your emotions and you're going to make bad entries and bad exits. Another thing that is important to know is you are never, ever, ever going to buy the bottom and sell the top. There is no such thing as a perfect trade. All we can do is look to be consistent and make profits. If you're sitting there lamenting, oh, if I held, I would have made this much more. I would have done this. I could have done that. Hindsight gets you absolutely nowhere unless you're reviewing a trade and trying to work on fixing mistakes. I will likely not be live for the EMC IPO. I'm going to be trading it with large positions, and I want to have all my focus. And when I am live, I am a much worse trader than when I'm not, for obvious reasons of distraction. So there's the open. We've got 1152, obviously a big gap up. And I'm going to start on the 2-minute time frame. So in terms of leaders, we've got CGC up 11%, by far greater than any of the others. MT and APH are only up 4% each. So let's see if they're going to be laggards and catch up a little bit. And we've got ACB and OGI right behind. So right now that shows me that we've got two really different sectors, or two different groupings here, with CGC, ACB, and OGI in one group, and APH and MT in the other. Not seeing nearly the upside. So this is a good sign for CGC, the fact that they're seeing this push up first thing, not a sell-off. Large amount of shares at 1175. Let's see if the bulls can knock that out. And it looks like they are, so this is a good sign. Lots of buying first thing. Let's see what $12 psychological resistance looks like. And then we've got $12.99 on the hourly chart as a resistance level. So as of right now, we just formed a low of the day at 1152. If we break 1152, that's a setback. That's our support right now on the day. So if we break 1152, we can expect further profit taking. Correct. When resistance breaks, it then becomes support. So 1025 was resistance on CGC towards the end of the day yesterday. We broke it by the close and then closed above it, so that now became a support level. So I'm going to be watching the daily charts as well to update moving averages. But as of right now, nice push first thing, but here we come back down to test the low of the day on CGC. And bulls really want to hold 1152. Otherwise, we're looking down to $11 psychological support after that point. And again, there's not very many support and resistance levels where we are currently trading, because the price hasn't been here very often in the past. So there's that break. You see what happens? As soon as 1152 broke, we just dropped 22 cents in a second. And that's because we had stop loss orders. People recognized what that support was, and it broke. So now we're going to look to establish a new support level. We're seeing some profit taking come in. This video will be recorded on YouTube. So you can see after that support broke and after we had that quick dump, now the bid and the ask are pretty far apart between each other, and the market makers work on tightening those bid and the asks up as things get a little bit settled down. But as of right now, the bears are in control of the short term. After we broke that 1152, and we don't have a support level established right now, we're looking at $11 psychological, and then the gap will fill from yesterday down to 1046 if we cannot establish a support level. So if there's no stop losses in this market, then you're having people with their sell orders filled out. Again, that's a strategy. You always, if you're looking to sell, your sell order is filled out, so all you have to do is press a button and your trade goes through. So if you can't set a stop loss, that is the strategy to have. And as soon as 1152 broke, we likely saw a bunch of people press that exit button, and here we come to $11 psychological support. So we saw the lack of support between 1152 and 11. And if I were a day trader, I would have been out long ago with my position I would have entered yesterday. I would have sold probably before 1152 even broke after that initial push to the upside. So it's going to take a lot of work for the bulls to get back above 1180 today. Here's this psychological support. You can see a nice amount of shares at that level. $1 million pretty much. In terms of your individual positions, I'm not going to tell you when to buy or sell, but you really need to have all of this game plan figured out beforehand. You need to enter every single trading day with your game plan laid out. If X happens, I'm going to do Y. If this happens, I'm going to do this. And that leaves you from making emotional decisions based on the price trading action right out of the gate. So like I said, rule of thumb, gap ups are for selling. I would have entered today knowing that I was looking to sell. And if you're trading long and you want to hold for multiple weeks, then your game plan is going to be different than someone who is like me and a day trader looking to lock in my gains whenever I have them. So we can see ACB now has given back 4% from the highs. OGI is still holding up very nicely. So look at that bounce right off $11, and that's the psychological support level. You can see the big amount of shares on that bid, and that's just knowing. I know that this psychological support level is likely to act as support. Just watching how these stocks with high volatility trade, and again, the lack of price history in the range we are currently in between $10 and $14, psychological support and resistance levels play a much greater factor. OGI's current support is the low of the day, 347. I would not be doing any trades because I'm sitting in all cash and I need all settled cash for the EMC IPO next week. But if I were doing trades, I would have been in yesterday. As we posted on Reddit, we were looking to buy yesterday at the open. And again, it's really hard to convey this information. Like I made that post on Reddit and I was confident saying we're looking to buy today because I expected the bottom to be found. But really, if you want this information, we've got the chat room on thechartguys.com with over 100 people in it for the marijuana sector alone. Obviously, a ton of people have been coming in the past week, but it's really easy to have one centralized place where I can put my thoughts and everybody can see them so I don't have to be repeating and people are trying to find what our opinions are. That is the centralized location of where we're going to be putting all of our information every day. We had people entering CGC yesterday in the low $8 range because they knew to be looking to buy yesterday on the gap down open. I use charts strictly. It's important to know about the fundamental news things, but unless it shows up on the charts, I don't put any additional leverage. I don't put any weight into the news unless I see it on the charts. So bulls are showing up back up here again for CGC. I expect a lower high to form compared to 1180. If the bulls break 1180, that will show a lot of strength, but I would not expect that to happen, at least on this push. Our range is set between 11 and 1180. I'm looking for a lower high to form compared to 1180 and then a pullback and a higher low to form compared to $11. IIPR was delayed until tomorrow. If EMC were the same day as IIPR, then I would cover them both. Otherwise, I'm not going to be covering EMC live. So we've got our first 5-minute candlestick set on CGC. And now I expect this next candlestick to fit within the range of the previous candlestick. That's reaching a bit of an equilibrium after the wild volatility in the first 5 minutes of trading. So the low of this candlestick on the 5-minute chart is now a new support, 1121. So we have 11 and 1121 support, and resistance is 1180, and the high of this candlestick, 1154. We can see APH and MT are catching up a little bit now. They are up over 1% higher than when we opened. So we saw CGC and these other names cool off a little bit, and then the laggards catch up a little bit. And OGI is looking one of the strongest right now. It has held up very well. And we'll see if we get a push towards the high of the day on OGI. But you can see we're seeing clear CGC resistance in the mid 1150s. There's our lower high. It looks like 1154 might be that lower high. And this is also that inside candlestick. If you watch the inside candlestick video on my YouTube channel, tightening range, and we'll see if we get a clear break of this inside candlestick on the next 5-minute candlestick. IIPR IPO can go live at any point at this point. And I would think they would be very, very, very dumb to go live on a half trading day on a holiday week. They're just asking for terrible volume if they do that. So I would be very surprised if they went live before next week. I do not have a chart on SL. It is not chartable on Fidelity, nor stock charts, nor TradingView. All these other tickers are. So here's CGC. We have an inside candlestick on the 5-minute. A break of 1154 will be a bullish short-term move, and here we come to test that resistance again. Decent amount of shares on 1150 resistance, psychological level. SPRWF is not trading today. The U.S. markets are closed. MT catching up in a big way, so it is now up twice as much percentage-wise. That's a nice laggard move. It started the day up 4% with CGC up 10%, and now it is up 8% as it is catching up. So MT is a nice example of a laggard. There is still a wide bid and an ask spread, but a nice example of a laggard catching up to the lead bull. I am not in Canada. I'm in the US. OGI resistance is 370. That is correct. Let's look at that 5-minute chart. So the difference in OGI here, we had an inside candlestick and it's already broken. Actually, it hasn't broken. 357 is a key support on OGI as well. So CGC.TO, the range is getting tighter and tighter since the open. We're going to see a clear break here in the next 5 or 10 minutes for a short-term move. EMH.V, I can get that one. So support is the low of the day, 142. Resistance is 151 and 155. And we're going to see a lot less movement in terms of the amount of cents that moves because of the size of the ticker here, 150. And it doesn't look to be linked very strongly to these other sector leaders as it's not even up 1% today. So ACB resistance is 315. Nice bid for ACB at 309. A big amount of shares at 309, and we're coming up to test towards the high of the day, 315. So let's look at ACB.V. Inside candlesticks forming as well. Tightening range. A break of 313 would have us testing the high of the day, and a break of 303 would have us looking at the low of the day. So still everything from the first 5 minutes is reaching an equilibrium, settling down, tightening the range, volume decreasing, and we're going to see a clear break of that, likely in the next 5-minute candlestick. I use simple moving averages. I also use exponential moving averages as they react more quickly to the price. I use them on the shorter term time frames, the 5-minute and the hourly. I also use them on the daily chart as well. You can get some indications on the 4-period crossing the 8-period. And again, all of this information is available on chartguys.com. I have over 6 hours of educational videos. We have a free week trial and you can binge watch them all. I don't care if you sign up for a free week, binge watch them all and then leave. But all of that information is there. I have 3 videos alone on how I set up my charts and the indicators that I use and why. This is Fidelity software, and I don't know if they are available in Canada. I doubt it, but if they were, this is Fidelity Active Trader Pro. I've been using it for years and years. So APH resistance, nice break. Let's see if we got a bull break there. So APH is the strongest right now, and I can say that because the 5-minute chart, the candlesticks are higher low and a higher high, the second candlestick, where everybody else was within the range of the first candlestick. So this is a nice move. Resistance is 586. I've got support at 562 and 555. Bulls are looking good on APH. Fidelity is free. You have to open an account with Fidelity. So CGC just broke 1154. That was the resistance level. So let's see if the bulls can push up towards the 1160s. Nice bids are building. Taking out the ask. That's a bull push. So nice move for the CGC bulls, holding up well. And I'm now looking at a support for 1138 on CGC. The bulls have formed a higher low on every single 5-minute candlestick so far today. And we want to see that pattern maintain for the bull strength to maintain. I am not going to be talking about any stocks other than marijuana Canadian stocks today. So this is a nice bull move here. The bulls are holding up, not too much profit taking off of that gap up open. And it's just the high of the day on CGC, 1180 as resistance. We see ACB is heading up towards its high, OGI as well, and APH is at its high. EMH making a bull move. It's now up 5% more than when we just pulled it up. So the bulls are showing up in EMH as well. I doubt I get the ticker NSP. I don't know what exchange it's on. I don't know if it's... There it is, .V. So NSP.V is much weaker than all of these other names. Resistance is up at 43 cents on the daily chart, but it didn't see anywhere near as strong a move as all these other names did yesterday. Just wait. I don't know what your regulators are like in Canada, but from experience of the U.S. sector, what's going to happen now, I started in the U.S. sector when there were 8 companies, and they're now over 300. And I would say 250 of them are scams. So your regulators are going to have your hands full because we're going to see a balloon in the amount of marijuana stocks on your exchanges. Everybody sees the money pouring in, and they're going to be quick to rush. You're going to see companies change their name and business plan to try and get in on this green rush, and it's going to get a lot harder to sift through the BS. Scottrade will likely not be able to trade EMC. Fidelity is the only broker that I've come across so far that easily can trade the Canadian markets. CGC support is the low of this 5-minute candlestick, 1152. We want the bulls to maintain this higher low pattern on the 5-minute chart. So here we come to test the high of the day. If we break 1180 here, it shows a lot of strength, and that's a great sign for the bulls. I put out a 10-minute video or 12-minute video on EMC. I'm very excited for the IPO, and I will be buying in. If you feel lost, it just means you need to learn technical analysis and commit and motivate yourself to learn it. Like I said, it took me 4 months. I treated it every single day as my job. I've got 6+ hours of educational videos on thechartguys.com with a free week. You're welcome to come check them out. I broke it down as simply as I could. So CGC just topped out at 1174. That's a lower high compared to the high of the day. A new resistance level to be watching. Let's see if the bulls can make another attempt at that level. APH is still holding up at the high, as is MT. For IPO questions, you really need to ask your brokers. It's a per broker basis. You have to see with them if you are able to participate in the IPOs. They know the answer. I use RSI on every single time frame. I like it a lot. And we're very overbought here, so we can expect some consolidation. The 5-minute RSI is 94. That's extremely overbought. Let's check our hourly RSI. Hourly RSI is still lower at 64. Plenty of upside room there. So 1174 and 1180 are CGC resistance with 1152 support. Wide spread between the bid and the ask means volatility is high and it's not bullish. You want tighter bid and ask spreads. That means there's more liquidity, more trading opportunity, more volume. And a wide bid and ask spread is usually a turnoff for a lot of traders. So I'm watching the 4-period exponential moving average support. That's at 1150 now, but I'm watching the price action more, which is the higher low pattern on the 5-minute chart. Bulls want to hold this 1152 level. If we break 1152 without breaking the high of the day, I would look to pull back and establish a support again down in the 1130s or 1140s. And it looks like we did just break 1152, so that's the first lower low on the 5-minute candlesticks at any point today, and it's coming after a bit of a double top, 1180. I guess that's not a double top, but it's a lower high, 1180 and 1174. So we now have 2 resistance levels to be watching. And for support, I'm looking down at the lows of the 5-minute candlesticks, 1138, 1121, and we are still holding exponential 4-period 1146 support. TWMJF will do whatever CGC does tomorrow morning. So that depends on how we're going to close today. MJN.V has held up very well on the daily chart. It's a good looking daily chart for MJN.V. There's a gap to fill at 165 from the high of yesterday. Resistance is 175 and $2 correct. The middle or the upper Bollinger Band on the daily chart is at 182. That's also a resistance level to be watching, but it's going to change every day. The stock went up yesterday because it had gapped down 3 days in a row. The bears were exhausted to the downside. The bulls showed up and then shorts covered, which magnified into a 25% move. Correct Fidelity changes that because you don't have international set up. They have to code your account. They will do it on a phone call. And from then on out, you trade it with CGC ;CA. EMC, I'm hearing the 30th or early December, but I'm going to be ready for the 28th or the 30th. The IPO says the 28th. The company has said the 30th multiple times. Action this morning, the gap up was more significant than I anticipated it would be, but since the gap up, the bulls are holding on, and you can see the volume is slowing down. Everything's slowing down a little bit. The first 20 minutes of trading are the most volatile. But the bulls are holding up well at this point, but we know how quickly that can turn. So APH, if you were going to be looking to get out today, a break of the low of the day would obviously be a bearish signal. And here we are consolidating, trying to find a new support level. I'm looking at 562 and 555 as supports. Similar red candlestick on all the names. Watch the volume on the bearish candlesticks. For APH, it's an increase in bear volume. Bulls don't want to see that. For CGC, it's a decrease in bear volume, which is what the bulls want to see on consolidation. Bulls means going up and buying. Bears means going down and selling. So a fairly significant pullback. Bulls need to establish a new level of support now. I'm looking at 11.21 and then the low of the day, $11. So consolidating a bit, 11.27, 11.21, and 11 even. Bulls want to hold those levels. And again, volume is important. Increasing bear volume is always a red flag for the bulls. And we don't have that at this point on CGC, but we did on APH. Let's check the other names. ACB. Fairly close volume, not really significant either way. MT, very clear increase in big red volume. That's a red flag. That would have me a lot more cautious on MT than I would be on CGC due to this volume and candlestick. Lower volume is better for consolidation because it doesn't show the bears taking over. It essentially shows normal, healthy consolidation. You look at any chart on the daily time frame, and let me just pull up a random chart here off the top of my head. Looking for an example of a breakout name. Here we go. So AKS, obviously unrelated to the sector, but it's a breakout. Increasing bull volume on the breakout is what the bulls want to see. We trade sideways. This is the daily chart. We consolidate for 4 days in a row. Look at the volume. Decreasing bear volume on consolidation, and then we continue to higher highs, and the bull volume shows up when we start increasing again. This is a perfect textbook breakout for the bulls. Here's another one, X, doing the same thing. Breakout. Look at the bear volume on the consolidation compared to the bull volume on the continuation. So bull volume, low red volume, healthy consolidation, can't go up forever, and then continuation to the upside on an increase in bull volume. Textbook bullish breakout. That's exactly what the bulls want to see. I'll probably stream today till 10:30. Got some work to do with the animals and plants. I go live 2.5 hours every day. The majority, well, at this point, it's no longer the vast majority, but I do cover mostly real stocks, regular U.S. stocks, Facebook, Amazon, S&P 500. I track gold and oil and natural gas, all the commodities. So the marijuana sector is a portion of what we do. We have a separate chat channel with over 100 people in it, all watching the marijuana stocks each day. But when I'm live, I'm answering questions on all kinds of stocks and tickers. It's much more based. The website is based for technical analysis education, but obviously we will cover the marijuana stocks, especially when asked about them. I've got chickens and goats. If you haven't seen my goat video, I'll have to post that at the end. So CGC, 11.27, 11.25, 11.21. We're trying to build this base of support in the 11.20s. Search on my YouTube videos, goat indicator. APH, I mean, I really just don't buy gap up days. It's just not something that I do unless I'm looking for a quick day trade. But if you're looking to hold multiple days, today is not the day to be establishing a position, in my opinion. We've gone up 35% since yesterday. That's a good phrase for it, hobby farm. It was just a big 4-acre yard before we got here. We built a ton of beds and built a chicken coop and all that. That's the other thing about these stocks. You need to be familiar with the financials and know when shares are going to be hitting the market. Because we do have some names that have dilution and shares becoming free trading to start the year. And if you have a ticker that has 10 million shares becoming free trading, that's obviously going to have a negative impact on the stock price. So I'm going to try and do a video or try and do a course on how to research Canadian marijuana stocks by looking at their fundamentals, how to read through their financials, how to look at the charts and all that. But that's a few weeks away at the earliest. I would never short the marijuana sector in any way, shape, or form. It's just playing with fire. If I'm not playing it bullish, I'm just sitting and watching. But you do not want to be short this sector, in my opinion. Playing with fire, very easy to get burned. Not sure what information you are referring to, Jared. I'll talk about the farm later. That's pretty off topic at this point. That's the other thing. When you're reading, if you're getting all of your research on companies just from reading their news, you are reading every single thing that they want you to hear. They're sugarcoating everything. They're giving you only the good news. The bad news is buried in the financials under a bunch of difficult language to read. I have not read in depth enough for the MJN financials to give any specifics on that company. You need to read the financials, which are available on Cedar, SEDAR. Someone just mentioned it. And go in and read the financials, and you're going to open that up, and it's going to be a foreign language to you. But you have to practice at it. You have to look up terms and get familiar doing it. I think TSXV, the ventures, by definition, are more risky, and there's different requirements to be listed on the TSX compared to the TSX venture. So perhaps some higher reporting standards. Hello, ancient culture, ancient sculpture. So for CGC, at this point, 1125 is a must-hold support level, in my opinion. Otherwise, we're heading to the low of the day. I would not be... Ideally, I would have been in a position yesterday, seeing all that strength, looking to buy yesterday as we posted on Reddit, and seeing that there was very likely to be a gap up open today. I would be looking to sell my position today, not looking to really buy anything. OGI.V is actually fairly weak at this point. We're looking down at 353 and 347 as supports. We have a couple lower highs set to watch. So we saw this little bounce attempt, 2 green candlesticks, and we topped out at 366. So that's a new resistance level. And we look at CGC, that resistance level is 1174 and support is 1125. So the range is tightening. We had the high of the day and the low of the day in the first 5 minutes. Since then, we've formed a lower high and a higher low, and we're going to see this range continue to tighten, and we'll get a clear break. I do cover miners on live webcam. We have lots of interested members trading the miners. EMC, in my opinion, that would just be a complete guess. There's no point in even speculating. No one knows how high it's going to go on the opening day. All depends on your time frame for these trades. If you're looking to hold multiple months, it's completely different than if you're looking to day trade and short-term swing trade these positions trying to lock in profit. Today is a day for selling, in my opinion, if you bought yesterday. I have not seen the CGC interview yet. EMC, we're looking for November 30th at this point. I would, if we did see a break of the high of the day and I were day trading, I would likely get in and quickly scalp. Flip scalp means a quick short-term trade. Buy on the break of the high of the day and sell shortly thereafter. Not sell short, but sell in the near-term future on a quick spike up towards $12 if that were to happen. Too soon to say whether tomorrow will be red or green, but I'm the kind of trader that likes my profits when I have them. And seeing that initial push, I would be very pleased with the profits from entry yesterday. Exit the position and then just watch it with a clean slate, no bias in either direction. And if the bulls prove themselves to me, see another run up towards the end of the day, that would show strength, and I would be looking for the bulls to show continuation. 20, the simple 20 moving average is the backbone of my technical analysis on every time frame. You guys are asking me the craziest off-topic questions. I'm just going to be ignoring a bunch of them. I'll have to see where I'm at 3 p.m. Eastern. If I'm doing nothing, which is unlikely, I'll come on, but we'll see. The task force, I mean, we don't know the details of the Canadian legalization, so it's going to be very volatile when that comes out. And if it's an unfriendly regulation towards these names, we can expect a sell-off. So trading is getting very tight. We've got APH resistance at 588. Support is 571, the consolidation low after the high of the day, and we're now trading 15 minutes within that range. 588 resistance, 571 support. So if you were planning on buying ACB and APH, why would you want to buy today instead of yesterday is my question. When they're up so much more significant than they were yesterday, it's seeing all that green that's inciting you to want to buy today when yesterday was the day to be buying, in my opinion. We saw all bulls all day yesterday. MA is SMA. They're both the same thing. Simple moving average. I'm not going to be buying into CGC anytime soon because I have all my attention focused on the EMC IPO. So look at the range on CGC is tightening tighter and tighter. We have lows of these candlesticks at 1127, 1125, 25, 25. Very clearly, 1125 is building a base of support. Bulls need to see a move, get back above 1155. So we're going to see a short-term clear break of this tightening range on CGC. If it's a break of 1125, we're heading to the low of the day. And if it's a break of 1155, we're heading up to the 1170s. You can see these 5-minute candlesticks range getting tighter and tighter. All other names have consolidated a bit more than CGC has. We saw ACB and OGI both up 8-9% at the start of the morning. They've cooled off a little bit. CGC is still holding up pretty well. Once EMC is trading live, the shares are available. They're on the market. The specific broker doesn't have to have the shares. There is a double bottom on the CGC 5-minute, 1125. This is real-time fidelity. If you're watching anything that's 15 minutes delayed, you should not be day trading. OGI.V, very clear bear compared to everybody else. We broke the low of the day. No one else that I've been watching has done that yet. So as soon as we broke 347, that was a red flag. New support is 342. Very clear pullback. And we look at CGC.TO, and it's holding up a lot better at this point. OGI, we're looking at 342. The gap on the daily chart will fill at the high of yesterday. And that high of yesterday for OGI was up at 335. So that's a support level that I'm watching if 342 breaks. So ACB is still holding up, tightening as well. The low of the day, 295 support, $3 psychological support, and we're building a base at 302 here. So that 302 base is lining up with the 1125 base of CGC. A general rule of thumb, if you are in a position and you are already up, at the bare minimum, you want to have a stop loss or be ready to exit your position at break even. The last thing you want to do is go from being in the green to being in the red and then stuck holding the bag. So that whenever I'm nicely in the green, that is always my exit point, stop loss, break even, and then I establish my game plan from there. ACB resistance is 305, and then looking up at 314, and then the high of the day. So CGC bulls need to break 1145 here. Still holding exponential 5-minute moving average support. Range is still tightening from the first 5 minutes of the day. MT is consolidating. Support is down at 592 and 576. The 20-period 5-minute moving average is 584. That's going to be in play soon. So because of the gap up open on all of these names, this 20-period 5-minute moving average wasn't in play, and you can see it's catching up now with the price as it continues to trade. So that is going to be a factor going forward. And look at yesterday. Watch the 5-minute chart for yesterday on all these names. MT, 20-period moving average. We traded tight towards the end of the day and then broke above, holding that support. And for CGC, I pointed out to start this video, the bulls held that 20-period 5-minute moving average support literally the entire day. So that's a key level today. It's at 1092 and continuing to catch up. I'm using the 5-minute chart currently. I'll use 2-minute chart as the lowest I will go in terms of time frame. So CGC, nice break of 1155. We're looking at, or 1145, I should say. We're looking at 1155 and 1174 as the next resistances. I don't like the 1-minute chart because it gives a lot of fake outs. It's too fast moving in terms of its responsiveness. It gives breakouts and then pulls back. It's just, unless you're trading with really large capital in 5-minute time frames, in terms of how long you're holding your trade for, a couple minutes, then I would not be using the 1-minute chart. So whether you're looking at long at these stocks, it all depends on your time frame. And some people saying, you know, being long is the only way to play it, but that's not really true because we know people that sold up at $15 and then rebought down at $8 and they can buy essentially twice as many shares. So there is definitely value in being able to play this volatility, and you can load up, reinvest your profits, and then establish a long game plan once the volatility calms down. But this trading opportunity with this volatility cannot pass that up. For the EMA, it depends on what charting system or broker you're using, but you can adjust the period for the EMA, and you just enter 4 as the period. Free charting software, stockcharts.com and tradingview.com. Certainly not suggesting buying CGC at $15. That was the selling point. We have plenty of people selling on the big spike and rebuying on this pullback in our chat room. APH is getting very tight. Support is 572, 571, and resistance is 582, and the high of the day, 588. So everything is still calming down from the open. CGC is still within the range of the first 5-minute candlestick. I do not think we're going to see the kind of bullish action we saw on November 16th in the short term. Things are settling down after all of that volatility. I am not currently trading today. Here's a support test for CGC, 1125, very key level. It has held on multiple 5-minute candlestick lows. So for CGC, I'm now watching 1125 support and 1150 resistance. That was the high of the last 5-minute candlestick, and you can see the range is continuing to tighten. Volume is continuing to decrease as things settle down from the open. And we should see a clear break within the next 15 minutes or so, either below 1125 or above 1150. I use 5-minute charts far more often than I use 2-minute charts. OGI is showing weakness. 334 is support. We've seen lower highs and lower lows. Look at the increase in bear volume in this 15-minute breakdown. We broke the low of the day and saw increasing bear volume. So OGI is showing more weakness than CGC is. I'm going to stay on until we get this CGC clear break of either 1125 or 1150, which will indicate short-term direction. As things continue to get tighter, this is what I call reaching an equilibrium. MT.V support 592, 590, and we're breaking that support right now. So the 20-period 5-minute moving average is 586, and we're looking at the low of the day, 576. So here's this 1125 support test. Looks like we're going to get a bear break on CGC. OGI is now down to plus 2% on the day. It was plus 9% early on. This is Fidelity Active Trader Pro. So CGC bulls just held support one more time. That makes 4 tests now and 4 holds of 1125. Key support level. So quick bear break. You see right when 1125 breaks, we see a 15-cent drop. We're not the only ones watching these support levels. Traders recognize technical analysis. Look at that dump, 25 cents in a second. Key 11 support test, low of the day. Very important support about to break. Battle of the bulls and the bears right here. Ooh, it just held. $11 key support. Bulls are showing up in a big way to try and maintain that low of the day. So if we break this low of the day, it's just further confirmation that today was a sell the gap up kind of day. We're seeing APH is on the verge of going red. OGI is going red. EMH is red. MT is on the verge of going red. So it's very, very clear gap up today was likely the point for selling. $11 must hold support for CGC. So I'm going to be wrapping up here in just a bit, but a couple points of information. Just want to remind you, at chartguys.com, we've got a large marijuana chat room with over 120 people where we talk about MJ and focus on the technicals pretty much all day, pointing out support and resistance levels, posting some charts, and a lot of people looking to learn together. And at thechartguys.com, we've got 3 analysts with all different specialties with commodities and different charting platforms and really different trading styles. And it's combining those different styles and sharing all that information, which certainly is good information to have. And you can pick and choose with what best suits you or what resonates with you in terms of whether it's patterns or James's style, Chart Guys James, or my style. But look at this CGC dump. Very clearly, the low of the day breaking is the red flag for the bulls. Gap up for profit taking today. Entry was yesterday. And it looks like our temporary lower high is set now at 1180. So we've got a free trial on thechartguys.com. Come check it out for a free week. We don't care if you come and binge watch all the educational 6 hours of videos we've got and then leave. Just come check it out. And we can also offer a discount code if people sign up today only. We're pretty much open to everything. We're pretty easygoing guys, you will find out, with all similar goals and game plans, learning technical analysis and making profit. So the link is chartguys.com. And we got a code MJNOV. Let me type it out here. And that would be 20% off the first month. That's the wrong link. MJNOV24. So the quick dump, once the low of the day broke, established the bears have control since the open. And today's not a day for buying, in my opinion. It's pretty much playing out as we anticipated. You do not want to be buying after a 35% move to the upside after a gap up. APH is now down in the red 4%. Huge dump. Support is 515. We need to look down at yesterday. We have filled the gap. The gap was at 560. So we filled the gap in a big way. So we're looking at 515 support. Then I'm looking at 506 and 5 even. Middle Bollinger Band on the daily chart is 478. So this is that lower high that I was talking about. Let me pull up CGC daily chart. So the high, we were expecting a lower high compared to the high of November 18th, and we topped out at 1180 today. Looks like that's going to be our lower high, and I expect to pull back down towards the $10 area and establish a higher low. I expect a consolidating range, lower high, higher low, lower high, tight, 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 and a clear break sometime within the next week, sometime later next week. General rule of thumb, gap ups are for selling, gap downs are for buying. A nice bounce at this point on CGC from the low, but it's still lower highs unless we can get up over 1150. So what I'm noticing is on these quick dumps, we usually have a really nice quick buyback right afterwards. And there's day trade opportunities there. Anytime you see a quick dump, buying that quick dump at the bottom and flipping it 5 minutes later, you can make a decent amount of money. This is a very consistent pattern. After a dump, the next 5-minute candlestick usually sees a nice bounce. It usually ends up being a lower high, but there is a trade to be had there. And you can see how wide the bid and the ask spread are now. That's due to the spike in volatility, and the market makers are trying to calm things down. So all of these names are seeing a nice bounce from that quick dump to the low. Look at the size of the bear volume, all red flags for the bulls. And we're seeing if it's just going to be another lower high. Look at the bull volume compared to the bear volume on the 5-minute red candlestick compared to the 5-minute bounce candlestick. It's not comparing. Bears are still in control. OGI saw the same dump. OGI gave the red flag first in terms of bearish action by breaking the low of the day, 347, on increasing bear volume. Here's that increasing bear volume again. Support is 307 and $3 psychological. When you're day trading, even if you're just locking in $200 on a day trade, it's worth it. It adds up. We're looking for base hits. We're not swinging for home runs. If you're a day trader, you're looking for consistent win streaks of adding up those small-term wins. Base hits rather than going for home runs. And that's why I'm a lot more keen to be locking in profit. I was saying this morning how I was looking, if I were in a position from yesterday, I would be looking to sell the gap up open. And people are asking, well, what about leaving money on the table and all that? I don't care about leaving money on the table. I want to lock in my profit when I have it and then reestablish and start with a clean slate and look for another trade. So new resistance level is 1125. Previous support, perfect example. Remember 1125 on CGC? It held as a low on 4 candlesticks. Look at the high of this bounce, 1125 to the penny. Previous support, now acting as resistance. Personally, yes, I buy and sell all of my positions, but if you have a long-term position, you can trade around that. You can keep half your shares for long-term and then day trade or short-term trade your second half of your position. Everybody's individual game plan is tailored to their own financial situation and their own time frame for these trades. The amount of money that I'm going to be putting on the EMC IPO personally, if I had a family and kids to be looking after, it would be a stupid thing to do and I wouldn't be doing it. But because I am single and have no responsibilities in terms of a family to be looking after, I can be a lot more risky with trading my money. So that's why when people ask me individual questions about their individual situations, it's so hard for me to give any kind of advice because everybody is so different. So 1125 is resistance. And here comes another test. EMC is a hype play. I don't care what price it opens at. I don't care the valuation. Hype trumps valuation every time. So if we can't break 1125, we're looking at 11 and 1065 after that. I will likely day trade one of my EMC positions. All depends on the action and if we close strong. I would expect EMC to open between $1.50 and $2. Americans are interested in that IPO. And in my opinion, smart money is getting out of these pops on these Canadian LPs, smart trader money, and going to be playing that IPO, maybe make some money in that IPO, and then come back to these LPs. You can watch the money literally shift around. After the election, the money shifted out of the US sector and came into the Canadian sector. And now we're seeing some profit taking. We'll see if that flows into EMC. You can watch the volume and the dollar amount and see where the money is coming and going to. %100% day on EMC is possible. It's not very likely, but it's certainly possible with the amount of hype that's going to be expected. This is free Fidelity Active Trader Pro if you sign up for an account. I'm not sure what the minimum to open an account is, maybe a couple $1,000s. I have a 12-minute video on EMC IPO. Check out my YouTube channel. Check out our website, thechartguys.com. The amount of questions that are answered in those videos and on our site, it really ends up repeating ourselves time and time again. That is where the centralized information on all of these questions can be found. So I'm going to wrap up here again one more time, thechartguys.com. Come check it out for a free week trial. We've got 120 people in the MJ chat room alone. We've got 3 analysts, all with different specialties, and our goal is to teach technical analysis. We're not going to tell you when to buy and sell. We're going to point out support and resistance, and ideally, we want to teach you to fish. We're not going to give you fish. We want you to be able to trade on your own, learning these skills and being a lot more comfortable and confident with what is going on. And there's 6+ hours of videos on the website to come check out if you are new to technical analysis. I am live for 2.5 hours every single trading day at thechartguys.com. I do not trade Forex. I appreciate everybody checking it out today, and next time we've got a day with the US off and Canada trading, I'll do this again. So CGC, just to wrap it up, 1125. If we break that level, we're looking up at 1150, the next resistance. Support is 11 even, and then 1065. So thanks for tuning in, and I will see you all soon. Have a wonderful rest of your Thursday. And that's that.